right, let's talk about it. The first 3 minutes, how bias was formed in the first 30 seconds, three best trades of the session for me, features of the day, three of them, and then three possibilities for the weekend tomorrow. Thing that we focus here on is process. To be a good trader, you have to have a good process. So I can't make you a good trader. I can't give you a good system. I can help you with process, and that's what I focus on here. So let's talk about bias. Second here. There we go. There we go. Reason for the bias was that we were deep in discount. Price opens low in a very large bullish range. So to me, it seems like buyers might have a better chance. High time frame data correlations seem to indicate a neutral bullish stance. So that, 2 for 2 on my side. There is a weekly bearish channel. We tested the high of it and we're rejecting, but we had tested the mid and had pushed up to it before we rejected. So any retracement is going to be bought. So that gives me a chance to have a bullish swing today. And, generally, I think we're oversold given how far we sold off yesterday. So didn't expect anything to be much more than balanced today and wide swings. That's what it was. But that's the main reason why I was focused on the bull side. Three best trades, 835 turtle soup, got that one. The 949 pullback long, I did not get that one. And the 1147 turtle soup long, I did get that one. So three, got lucky today. No stop outs, but there were plenty to be had. Today ended up being a tough day because it was oversold and the likelihood of balance is high. 3-day time features were a tight range. So we started bullish on the week and then are in a bullish location, then sort of like slowly tipped over. Big sell-off day before yesterday and now a tight range. But there is no old structure broken on the 60-minute from yesterday. So we're consolidating in a range, so to speak, in interior liquidity, so to speak. Show you what that means. And we're holding above a pivot that seemed rather obvious to be taken out. So that kind of sets us up for tomorrow with, will we drive lower, take that pivot out and reverse to end up neutral on the week? Or will we trend lower, say, to heck with these pivots and buyers, we're going lower? Or will we just balance again? And if we do balance again, probably we'll balance above yesterday's balance or just below it, but not likely right on top of it. So I'd like to dive deeper now. I want to go into the workflows and the trades that the process reveals, win, lose, or scratch. And the idea is to demonstrate sound process mapping. That's the objective in this channel. It's always to focus on how process wins the day, not being a superhuman, not being super intelligent, not having the best of anything, not having 14 monitors, none of it. Just good old-fashioned process. So let's see if we can switch here to that. Okay. So let's drive through basically the setup for the day. What I do is I come in and I'm looking at this. I'm looking at this chart and I'm saying, okay. Now, of course, you can see today's printed on here, but how do we build a context here? First things first is we focus on setting up premium and discount. A lot of people talk about this. Al Brooks talks about this. He talks about you want to buy low and you want to sell high. ICT talks about this as a premium and discount. Got complicated ways of doing that. But the main idea is that, at this point, when we were going through here, it was a trend. And then by the time this sell-off happened, it wasn't a trend anymore. It was a trading range. So what do you want to do in the low part of a trading range? You probably want to buy. So that's the way I think about it. So when I set this up, coming in the morning, I'm looking at this and saying, all right, so is there another high and low that I can focus on that seems to, where there was a stop run, like see how this bar is outside? And then coming into the low, we don't really have anything other than, the 8 a.m. one. So between here and here really is kind of another way of creating some equilibrium, premium and discount. You notice anything about that equilibrium? It's like right in the middle of the day. Isn't that fascinating? So, those are ways in which I chunk down the context to understand what my operating range might be. All right, now that that's done, I've already marked off levels, so that's just part of my process. You have your own. And then once that's done, what I'm basically doing is sitting on my hands waiting for something to happen. And if you look at this, you can see that this first trade that I took right here, basically right there, you can see that it's at a high time frame level, and I get the reaction that I'm looking for in my setup, and we run higher, and the target that you're aiming for. Now this is where I did something different than the prescription. This probably should have been the target. However, I was aiming for that. Now, given the day and given the potential for the day, I got real lucky. I think in a lot of ways, that's probably the best case scenario because it's setting up as a balanced day. This is not super strong. This kind of stayed here for a while and then eventually ran off. And then the pullback, normally what I do is I add in once before it gets to the target, but once it pulls back into some other sequencing. Well, this hit a potential target and then came back too high. So I would have wanted it to be lower. So it would have taken my R off on the trade. So I just kept the core position on and then ran that to target. The second trade is this 947 trade right here, 949 I guess it is, which fails. It doesn't get to its target before you get taken out. And then the last one is down here where we are now even deeper into discount, and we're also be at the daily location and also a 1 hour location where I see the same configuration here as that I saw here. It takes a little bit longer. And it's just before lunch. So I'm expecting this on a balanced day to just reverse, and it does. And again, I make a minor mistake here. Well, mistake. This is typically my process, not typically, every time. My process is I put my trades on like this. And what I do is I measure the risk, and then I count 3 to 1. And that's usually the place I peel 1. And then I want to add back in and then run to target. So with that strategy, you can see that depending on how many contracts you have on for your core position, you could be net neutral on the trade before it's even headed to its target. Usually that's the case for me a lot of times. So this trade runs also to target. And then I was bebopping around on a strategy for the rest of the day. So, but the basic thing that I'm trying to point out here is that the prep on the higher time frame allowed me to take setups that were at extreme locations with the expectation that buyers would step in. So that's the big idea. And the process I used to get there was having a very effective and clear idea about what the execution strategy is. What does price need to do? You can see I don't use any indicators. What does price need to do in order to show me that it's moving in the direction that I'm choosing to trade? And then how do I chunk down my support and resistance, so to speak? And then how do I further chunk that down in a context that frames where buyers should be and where sellers should be? So it's not just lines on a chart. There's also a lot of logic to it. It's time of day. It's support and resistance. It's overbought, oversold, but all based on price action. So that is it for today. Looking forward to tomorrow, and I will catch you on the flip side.